All right. Hey, gang. Thank you for joining me here today. So, I love the opportunity to be able to share with you what I'm actually trading these days and the reason behind that. And that's basically what today's session is going to be about. However, one thing that's very different from me, from a lot of the people that you've seen, is that I don't really use indicators. So, occasionally you'll see me put things like Fibonacci on, but that's about it. Pretty much naked trader here. It's a good thing I didn't have the video on overnight, right? So what we're looking at when we're trading naked is we're just trading without any sort of indicators whatsoever. And what that means is that we're basically focusing on reading pure price action. So what I'm going to share with you today are some of my trades from today and the reasoning behind them from a technical standpoint that doesn't rely upon those indicators. So I use a style of technical analysis where I have these building blocks that go into the creation of every pattern. So we start with things such as trend placement, momentum, support and resistance levels, and of course, volume as well. And time development is the fifth one that I use. So I'm going to use all of those in showing you the strategies that I took today and the reasoning behind them. And hopefully you'll be able to take some of those lessons and apply them to your own trading as well. So let's switch on over here and I'm going to pull up my slides for that. And I just did some screenshots for you. So we're going to start with my very first trade of the day, which was actually before the market opened here this morning. And I'm going to pull up my charts over in the background too. So hold on one second. Like grab some of those. So I've got the NQ up over here. So I'm going to be coming back to this one. But as we were starting today, one of the things that we look for is trend exhaustion. So, how do we understand when a trend really has a chance to go and develop into reversal patterns? And that really has to come down to what's happening on the larger time frame. So, if we take a look at the larger time frame of the NASDAQ, here is the 5,000 tick chart. This is the micro, but everything you see on here is going to be just the same as what you're going to be seeing intraday on the E-mini as well. So the pattern that was developing here, I'm going to grab my pen, is that over the last couple of days, what we saw was a break in this very narrow trading channel here. So a lot of back and forth action. And the channel broke, gave a nice little flush. You can see that initial channel break right here, and then to a larger degree over here as we were heading into yesterday's session as well. Um, as this kind of popped up here, what you'll notice is that it had not yesterday's session, Friday's session, but as it had a more gradual pullback kind of along the upper end of that trading range. Well, this is very common when a trend is showing exhaustion. So you'll get your trading channel, you'll get it going back and forth and back and forth, and then you'll get a break in that channel. And what I do is once it puts in that break, I want to look for something that's going to create a reversal strategy. So a common example of that would be something such as a 2B, which can be part of a larger megaphone here. Here's the 2B down here, or a Phoenix, which is the strategy that we saw developing here heading into the week. So this triggered here in the early morning hours yesterday. And this is a pattern where when you have this slowdown, so especially starting over here where you have the really strong momentum, and then you've got the slowdown. I call this the leg, and this is the foot. So when this foot formation happens, and then we get that kind of flush action, usually when that flips around, we get these really strong momentum moves coming into play. So this was something that served as an initial guide for buying throughout the course of the week so far. So yesterday I was still looking for continuations on the upside until we got into the close and we were coming into kind of that first level of resistance where that foot starts. So this is your ankle zone over here. So as that ankle happens, that is your first level of resistance. But if there's no real pause as it comes up into that ankle, we usually get a push through that. So it's usually going to continue to bring us in more momentum. So this kept me on the more bullish side as we went into today's session. So what you'll see here is that as we were pulling back overnight, we started to get a little bit of that shifting coming into play. And let me clear this and go down to that smaller time frame. So here is that shift. So again, you've got your leg portion and your foot portion. And having a foot that is kind of widening up a little bit. So notice that you don't have pure parallel lines here between the highs and the lows. That is actually something that I like even better for reversals than something where the lines are just totally parallel. So that's the break in the trading channel. And then we've got that same setup happening again on the smaller time frame. And we also saw similar type of action down here on the much, much, much smaller time frame. So as this was coming in for that third low down there, that was the first zone that I used for initiating a trade in the continuation pattern. So notice you've got all of the support from over here as well. And this is the first pullback coming off of the high, but it has that shift in momentum. So even when this has a greater chance to go and end up breaking lower, let's say the trend is more exhausted over here on the upside, usually what you'll still see is a second wave of upside before it will try to go and turn back around again. So at the very least, I was expecting to get that second wave coming out of it. As we were talking during my live classes over the last couple of days, though, I've really been looking more for some continued upside here this week. And so my overall bias has been to not focus too much on the downside of things. I did have a setup into the close yesterday on the downside, but overall, they tend to be more scalpish type of trades where I'm looking to play with the trend on the upside instead. So some of the things that we see here with the trend development are, first of all, we've got the leg and the foot. We've got the break of that trading channel. And then we also have this shift in momentum. Now, in an ideal situation, what you're going to see is that as that shift happens, volume is going to be dropping off. So at the same time as this was happening and developing over here, I had the smaller setup over here. I did take partials as we came up into what is this breakdown zone right here? And then built back into it over here. And this is where I have my original executions for these marked on that slide in the PowerPoint. Hold on one second. Go back to show you that. So that's where these are. So you can see that kind of really small shift. I know it's hard to see here on the really little tiny time frame, but there's that little shift right here that is just like the one that was repeated after the channel broke. So these were the two zones that I built into the positions at here. And then every day at noon, I teach a class live where we use live market action. We look at what is happening so far that day in the market and where things are at. And that brought us up into here. So what you'll notice here is that we've got an initial pop. We're breaking the channel even more. We've got that momentum really coming into play. And we get a little two-wave correction. Well, pops up again. We get a little single wave of correction, pops up again. Look at the measured move that happens right here. So another type of way that a trend can develop, in addition to having our leg, oftentimes a little kneecap in there, and then going into the foot, and then going into reversal strategies, is what we know as just the three-wave trend development. Elliott wave will refer to it as 5. I refer to the main portion as 2. But essentially what we're looking at is that initial upside move and a single correction, secondary move, another correction, and then the third move. So when I'm looking, I count this as wave 1, this is wave 2, and this is the 2 waves of correction. Well, the way that that can play out can happen in many different ways. So we can see this, for example, having a shorter initial move, a bigger secondary move, and then a shorter third move. And as I was talking in my class, it went from noon to 1 today. We were right at this level. So I had just exited the position that I had built down here, and we were looking at the possibility of this offering a continuation and where that do or die point would be, and would it really have a good probability of putting in a third move or not. So this is where looking at those waves comes into play. If you have an initial wave here, we'll call this A, and then we've got a secondary wave here called B. I'll kind of color code those here so we can see those. So here's B. B has two little portions to it, but the correction is smaller than what we see between A and B, and that's what's really important. So we'll call that 1 here. So number 1 is shorter, or sorry, longer than 2, which is more of like a little kneecap type of pause. So when we're looking at this, if B is less than 2A, meaning let's say B moves 90 points, but A moved 50 points. So then twice A is going to be less than what B is. That means that our chance of getting C for third move up is really strong. Now, what we want to see is where is that continuation most likely to happen? So this portion here that I labeled 1, we want to see that happening again over here so that you have about that same amount of time. So the screenshot that I took from my class here is what we were looking at for the do or die spot for that third leg. And then after that point, things go into what we call a widening up zone. And when that happens, it means you can start to look for a lot more back and forth action. So it's not just fully a continuation pattern or just fully reversal patterns. You can look for more of that choppier back and forth action. So this gave us exactly where to anticipate that third move just by understanding that type of trend development. Now, other ways that your your trend here can continue is you can have your initial move, your two waves of correction can be sideways, and then get your second move. You can get a larger first move, shorter second move, and then a larger third move. So basically, both of these are wave 1, and both of these are your second main waves, and then you're looking at this middle wave here. So that's B. And what we're really trying to determine is, which one of these is going to play out. Well, if your momentum is the same or stronger, then you're more likely that you're going to have a nice third move. If your momentum is kind of slowing a little bit, then it's harder to get that third move going as strongly. So at this point, my traders were looking for the market to continue up a little bit into the early afternoon, but then going into that widening up zone here later on. And it's all just because of the trend development. So what this brings us into is once that trade is over, what can we do with that widening up zone? Well, at this point, here's that third high up in here. And you can see that this is starting to come in and widen up. Now here, we also have that same first move and then the two moves here. The problem though is B, that second move with the two moves, it is twice A. So what that means is getting a third move becomes more difficult. You're going to have a harder time really getting that third move to come to the downside. So we start to look for reversal patterns a little bit earlier on. And the reversal pattern that took place right here is exactly the same pattern that we had on that larger NASDAQ chart. Let me pull that up again for you. It's hiding in the background there. Oh, that's my Russell. One thing Zoom doesn't allow me to do is hover to pull the chart up on the top. So it's kind of guesswork here. Here we go. So that pattern down here, this is where we saw that trend change. That's where we had the leg and the foot, and then this pattern right here's the phoenix. So that's what kicked off the buying. So the setup that came off of this low right here at right around 1345-ish, that's the same setup that is happening over here as we were heading into the start of the week. And if I put them right over the top of each other, you can see a lot more of how they're related. And the Dow this morning going into the open had the exact same pattern on the smaller time frames as well. Let me grab that too, so you can see all of these kind of put together. These are all the same pattern. So this pattern is called a phoenix. And what I'm looking for during the formation of this phoenix is not only for that initial channel line to break, which happens in all of these here, but then for this to have a slower overall momentum correction compared to what we see with previous waves of selling. So you can see some of these stronger spikes on the downside. So what I want is a more gradual correction. A lot more choppiness is good. If it has a solid 2 waves of correction, that's great as well. That can help you really with the timing, especially if the second wave has a lot more chop than the first. So if you're coming up, you get your first wave of correction, your second wave kind of looks a little bit more like that. That's really good. And then what we want to see is the decline in volume. So by looking at the volume, what this is telling us is that first of all, here you got the fastest volume coming into the first low. It goes into a slightly lower low with less volume. That's actually a sign of exhaustion as well. So it's better when you're looking at reversals if your volume spikes right at the first low and then you go into lower lows and it's basically just flushing people out, but they're no longer kind of creating the panic with it. So when it goes into the Phoenix formation, what I want to see is this gradual shift with the volume so that as it forms that second correction, the volume is really dropping off there. And that's telling me that even though this is pulling back, we're not really getting a lot of interest in that pullback. People aren't really panicking as much as they were earlier. So as soon as that channel breaks, there's a couple of ways you can do this as far as the entry goes. I tend to be more aggressive, but I've been trading for 25 years, so a little bit more experience. But if you want to use something as more of a confirmation type of tool, don't use this entire channel break as your entry. That's often what newer traders are taught as an entry trigger. As long as you can see 2 steady waves of correction, you can use a break in that second correction as your entry trigger. So this is what is kind of triggering the retest of the highs that we saw on the NASDAQ here this afternoon as we're already going into the back and forth action. But it's also the same thing that's happening over here. So here we don't have a second clear wave. We've got more of that kind of megaphone type of move. So that trigger actually takes place when that last break from that last channel pulls higher. And then over here on the Dow, you've got the break right here. Now, what's important about this is that this is what I used for the continuation this morning. So at the same time as we were getting that kind of retest of the low zone with the shift in the momentum in the NASDAQ, we were having the same Phoenix formation forming in the Dow. And that's important because we can see that it not only broke the channel, it looks so much like what's happening on the 5,000 tick chart, but we can even see, what happens here as a potential guide for what can happen in the larger time frames of the market. So if you follow the follow through on those setups that are happening on smaller time frames, those serve as really good guidelines for what you can watch for targets on larger time frames as well. And if you get enough examples of it, and this is something that I recommend every trader do, is you keep a folder where you have a lot of like the same strategies together and you put them all in one folder together so that you can go back and you can study the different variations of the strategies. So that's going to tell you, hey, if this isn't immediately breaking higher with the same momentum as it had over here, it's going to have a harder time following through. If it falls short and can only make it like 50% of the way up, like here, then you run the risk that this could change momentum and end up breaking lower. Now, in all of these examples, we have that really solid start to it, which is a good indication that you're going to get more than a measured move compared to this move here. But if this got stuck at or under a 50% price extension, so taking this move here and then doing like a comparison, if that gets stuck at 50% or less, then it's going to have a harder time being able to even make it to that 100%. And you will run the risk that a trap could form and it could eventually end up breaking lower. And how that helps you is that it helps you in your management of the trade. So a good example of this is actually what's happening right now on the ES. So I pull up the ES over here. If you look at the NASDAQ up here, this is the NQ. Look at what happens right here. So you've got your drop and then you have that three lows, right? Well, you've got the same thing over here, the drop and then the three lows. Look at what's happening here. It is struggling to get that momentum coming up. So what it's doing is it's shifting like this. And what does it do? It flushes. So it can be a really good indication that, hey, you might have a target level initially up here, but because of the way it's following through, you're going to have to adjust your target and you're going to need to get more aggressive in how you manage the trade. So as we were going into that third move on the bigger time frame in the NASDAQ intraday, that then had me go into the mode of looking more for back and forth action, kind of going and trading in this widening up zone. So let me clear this and I will go over and pull that up. And this is that zone right here. We come down to the low, so you kind of get that kind of megaphone widening. And we also have that break in the trading channel again here. So this did the widening up zone and now back into more of that back and forth action, which is where we saw again that smaller time frame buy. And then also once that worked itself out, it created another reversal pattern that is similar to a phoenix, but it's just kind of flipped over. So this starts and it tries to do a breakout here, but you'll notice it gets stuck at 50% or less than this rally here. So what did I just show you? I showed you that when we don't get that breakout like anticipated, and it goes and it starts to do a pullback instead, that can create a trap pattern. Well, that's exactly what happened over here. It went and it pulled back after it only made it to about 50% or less, comparing this move to the breakout move. So when that had that second move up, this now created the opportunity for a short, which is basically the same as if this had happened down in here. Now, the same thing you would want to see with volume is for volume to decline. So as this kind of comes down in here and bases along here, This is where you want to see really light volume developing. And in fact, if this had formed more like this too, this is more of a classical avalanche. That would be your entry trigger for that, where you would get nice solid two waves of correction. Then volume would tend to decline throughout this entire move, where you would get a little bit of a spike in volume as it kind of goes and starts, the second move up here, but then it would start to decline again. So your volume would look like this, first triangle, second triangle, with the second triangle being weaker than the first triangle. And you can see a little bit of that over here. So you've got your first triangle, little bit of a pop, but nothing really substantial, and then your second little triangle there. So it's a little bit harder to see on this, but that's what I would consider to be a textbook volume when you're looking for basically a counter trend move that you want the continuation trend to occur. That can happen during a bull flag as well. So if you get like a two-wave correction for a bull flag, you would want to see a little bit more of a volume drop to start with, and then less of a volume drop in that second portion. And then instead of taking a break of that entire channel as an entry, a lot of traders say, well, wait for the volume to pick up before I'm going to take a trade. I don't want to do that. I want to be entering that position when volume is really close to the lightest level that it's at, because when it's at that really light level, it's creating a lot of indecision. And once that channel breaks, then people tend to jump all over each other to try to get into the breakout. So if you're waiting for volume as a confirmation tool to pick up for an entry, you're usually going to be too late. And if you hit a market order, you're going to get some horrible fills. You can use a market stop order for entry using a break of that smaller trading channel, because that's going to trigger an entry that will be before the entire channel break. And so that can get you some pretty decent entry. My stop level is just using a channel here. So my stop continues to creep higher as it is moving higher. And up here, the stop I used was pretty, tight here to start with, but as it came down, I went and tightened it up more. The blue levels are the levels that I'd originally had as target levels. This is where I put orders on the books to exit the position. I ended up doing some trade management in here, so I didn't quite get a fill when it tested it the first time. Took my parcels when it came in and tested it the second time, and then built into it after the two waves of correction for a continuation into the larger target, which is just that breakout zone from the Phoenix. So if we look at the other markets right now, we go and pull that up. Oops, wrong button. Go pull up that NASDAQ again. Again with finding the hidden screen. So this action here on the Russell though, that was also an example of your trend exhaustion where it comes in really hard and fast and then it shifts that momentum. Dow. So here I'll show you the Dow one. So again, the volume decline, really important here. So here's the volume decline on the Dow. So entry trigger on the Dow was right here. And you can build into the position as well. And then the stop level is just taking that channel there, keeping the stop trailing along underneath that channel to begin with. And then look at where the volume starts to pick up. It starts to pick up after it's already kind of moving really strongly. So when it starts to move, there's not even really an increase in the volume at all. And that is not something that concerns me. It concerns a lot of traders because you want to see immediate follow through on something. And in most cases, this will go into immediate follow through, but there's many times that it will go into a little smaller phoenix too. So you'll have this bigger pattern repeated on a smaller scale. And that just adds an opportunity to build into the position further too, because now with that continuation there, well, you've got a tighter stop that you can move your stop up from the original position. So you can add more contracts in and still not be risking more than what you had on the original position. I'm going to go grab the NASDAQ again. And we have plenty of time, it looks like, for those of you that have markets that you want me to take a look at. I will tell you most of the markets now, most of the major stocks that traders are following, they're in what we call the widening up zone. So they are in that level where we have a better chance of getting back and forth action. Because on most of our markets, we've got that extreme momentum move that we had over the last couple of years, well, the last decade or so. And then we've got a pullback of about 50% or more. And when that happens, that creates a really big widening up zone. So you can get all different types of patterns forming in there, and there's not a primary bias for one on a bigger time frame. What you have to do is look for what's going on the smaller time frames for momentum shifts. So, for example, on the Dow here, pull this here. So this is, really similar to what's happening on a lot of those weekly time frames where we have that bigger pullback, it pulls back 50% or more in the market. And in this example, we see a really big shot to kind of go and puncture that previous high. And the indices, especially the NASDAQ, do have that possibility on the larger daily and weekly time frames. But at the same time, the odds of it really breaking strongly are not very great. You would have a much better chance that it would then fall back into the trading range. So this whole zone here following this big impulse move action is that widening up zone. And that's where you really have to rely upon the momentum shifts on the smaller time frames to look for setups. And you're not really looking for those really big weekly impulse moves anymore. So those that have some securities you want me to pull up, just go ahead and type them in the trading channel on target levels. So how do I look for target levels? Well, a lot of that comes back down to just looking at the pure price action. So when you're going back against the trend, this is something that I went over a lot here in my class at noon today. If this is your main trend move, for example, then your halfway point, a lot of times we'll get a little pause in here. So this is what I will call T2 or target 2. Where that channel began, that is target 3. So a lot of the targets that I aim for are based upon that, but I'm also looking at things like previous highs, previous lows. So this as an initial target zone, I was looking at this previous impulse move over here, the size of that impulse move and how it really compared to the size of the drop with the same amount of momentum coming in. So that told me, well, as long as it's continuing with about that same momentum, I should be able to get about that same size of movement. So at that point where it equals that measured impulse move, and if you go back and find a lot of impulse moves that are about the same size, it can add even more confidence to that level as a zone where things can start to widen up again, or that widening up zone. And then go back and look for other things such as previous highs, zones of congestion, and looking for that as a support level too. You can also look at wave counting on the correction and see if there's any shift that's happening in there. So for example, in this, there were 3 main waves and the momentum was pretty strong on them. So when it popped up a little bit longer and then tried again, that's usually going to be the end of the trend. So knowing that trend development, that helped time this low here. So you can see the break, the start of the trend, second wave, third wave. So each of these is faster than the previous one and goes further than the previous one. So with two time corrections, you're more likely to get a price correction. But because each is gaining in momentum, you still have a greater probability that it's going to come in and put in a lower low. So you still have that greater chance that it's going to start to widen up more and go in and test the support levels more. Now, I did have an order on the books as it was coming into this that didn't get filled, but that second move into there helped me go ahead and say, yep, you know what? I've got this trend exhaustion already. I need to be taking partials because I don't know how well that's going to bounce because this is my channel break over here. This is my first main leg up here. This could be going into a widening up zone that does something like this. And that could create a trap, break down again, just like what I drew earlier. So I needed to watch this and not go ahead and risk the entire position just because I had a bias to look for more downside. I needed to look for an opportunity where I could build into that position again on the downside, but yet still protect a lot of the gains that I already had. And what that means is watch for something where you get a two-wave correction. So that two-wave correction again, just like over here, becomes a good zone to look for that continuation on the downside. Now, some of the things to look for confirmations on the break higher here, look at the distance between these highs, high one and high two, and where it broke. So those are about the same size in terms of that time development. That means over here, I would also want to see about that same size for where it would break the lower end of that trading channel. And if I've got that symmetry in that time development, that's another one of those building blocks that becomes really important. I want that additional confirmation. Now, to make this even better, if I had done a time extension from here to here and looked out like this second high here, I would have liked to have had happen at a 61.8% time extension or more. So you can use Fibonacci time extensions, or you can just eyeball it and say, hey, that pivot is in the second portion or the second half of that measured move. Oh, and of course, it wouldn't be a Zoom meeting without a cat, right? So that gives you that stronger confirmation for the breakdown at that point, as long as it's in that second half. If it's at that second half zone, the 50% zone, or sooner, then you're usually going to need another level of congestion before it will try to continue. And that's kind of a little bit of what we ended up seeing happening because it wasn't quite perfect in terms of that time development. It was close, but not quite perfect. So getting a little bit of that pause as it still has that same time development on the bottom, that helped drive that move to the downside again there. And this one is one where again, you've got your leg, and then we get a little bit of a shift in the momentum here, where you've got the three lows kind of shifting it as it's coming into the support over here. So that's kind of giving you that additional little smaller wave of trend exhaustion as well. All right, let's go see what you guys want to take a look at here. I'm on NinjaTrader, which is kind of slow pulling up stocks, new securities. So I'm going to pull them up on TradingView for us. So I do this every Friday at noon too, totally free. So if you're interested in joining me for some live analysis, that's a great opportunity to do that. This is crude oil. And what you can see is it's kind of trying to do that same little shift here for a bounce, but it didn't quite break the channel by very much. So you want to make sure this has like a continued channel where it's shifting that momentum again. And then that would create a buy setup. If it is a little stronger on that initial drop. Sometimes we go for that slightly lower low, which creates that 2B pattern, and then it could get a phoenix after that point. But ideally, it would just bounce off of that slightly lower low. That's the pattern that I'm looking for, ideally here on oil. That's what I would like to see for this to give me a buy signal again. I trade gold, oil, index futures. I kind of shift markets depending upon where I'm living and what's going on in my life. So I started out as a stock trader, did that for good, probably 7 years without venturing into much else. And then moved into futures, some Forex. The only thing I do not trade are cryptos. I will analyze them. I just don't personally trade them. So we've got, let me scroll up, Costco. When I trade stocks, I really like trading opening gaps and opening momentum moves. So I'm often scanning for pre-market gappers or post-market ones and looking for those for trading the opening gap moves. So this is a daily time frame of Costco, and you'll notice that we do have more than a measured move on the upside. And then over here on this breakout, we've got a second move that is much stronger than the first portion of the breakout. And it's kind of struggling with trying to put in that third move there. So there's still room for it to try, but ideally I wouldn't like quite as much of a deep pullback here. So this is going to usually go into more of an opening, widening up zone over here. Let me look at the weekly on this. I would typically just be on day trade status on something that has this big of an impulse move already, because we can get a lot more of that back and forth action. So this is part of what could possibly be a 2T, but that second move is stronger than the first, which ideally I would like to see it go up and do something like that before I would really time any sort of correction. So right now, I would be very cautious on the upside. If it pulls back, I don't expect like a really rapid collapse. I would expect that it would do more of the back and forth action, like what we saw on the market overall today, especially that Dow. Let's see if I can grab that chart. Show you an example of where you can get that really extreme impulse move, and yet it will have a decent correction. It just doesn't. Well, gold here has an example of how it would look if it tried to go and do like the third move. But you'll notice here on gold, that second wave is shorter than the third or than the first. So that makes it easier for the third to go and do one that's similar to the first. Here with this stronger, it's going to be harder to put in an even stronger move on that upside. So you're more likely to see exhaustion type of action coming in. Again, I'm kind of going in guesswork to find my hidden Dow. My teaching computer here is a laptop with an extra monitor. And then my trading computer, I've got 6 monitors on that one. I often get asked about my setup. So here's what normally like a stronger move that we do get a decent correction in. This is what that looks like. So it starts out slower and then it does that extreme move. But again, you'll notice that that extreme move was more than twice the size of that first one. So that means there's even less of a chance of getting a third move. And that can go and trigger the short, where it basically just starts out gradually and then gains momentum. And what you want to see in this is kind of shorter little moves where the highs are actually a little bit lower. And that can drive in a stronger amount of selling. But if it went and it did a two-wave correction like this, that's harder to get that going on the downside because of the really extreme move on the upside. So what I would prefer to see would be something like that, where it comes in and then we kind of get more of a stair step to start with, and then that can drive stronger selling for those of you that are looking for bearish side or are looking for warning signals that a deeper bearish move can happen. This has an easier chance of giving a false breakdown right here and continuing higher. We actually saw that some point today. I can't remember when that was, or maybe it was yesterday. The NASDAQ did that yesterday. Let's see, CRM. I'll do a couple of these really fast, and then I'll give you guys my contact information here. I'll just answer a couple from some other folks first. If I got a chance, I'll come back to CRM. Palladium. So here we're coming up into what we call that T3 zone, the previous high zone. And again, this is that widening up zone. So you see how it pulled back more than 50%? That means this zone of the previous highs is really strong resistance. And markets tend to struggle to try to break through that if they've only had one solid move down. That one solid move has a beautiful three-wave trend. So you know that you've got that trend exhaustion coming into play here. But on the upside move, we have really extreme momentum, and yet it's already had one wave down and has broken that bigger trading channel. So the strongest would be for this to go and put in a measured move, but it would have to go and do it very, very quickly. So you would need to see this as basically just a little kneecap, and it would need to confirm by right here. The risk is higher, though, that that's not actually going to happen, that it would go into more of like what we ended up seeing here on the market this afternoon, as that came into the back to the previous high, where those breakouts end up being kind of stunted. So what you want to watch for, if it tries that break, this channel right here, that would be the confirmation trigger. And these are harder to trade because they're tilted. But then it would have to make it past 50% of this impulse move before it would give a confirmation that it could make it to 100%. So it's a lot harder to trade this as a continuation pattern than a lot of other strategies out there. Definitely a more advanced one because you have to be able to watch for the micro changes that could just lead this to go into, more of a widening up zone where it just goes back and forth. Even if this went to a higher high, that's still a widening up zone. You're just more likely to get more of a megaphone versus like a slower channel. Or you could get a shift in the channel that looks like that. So you're just going to be looking at more swings back and forth, really, is what's happening. Like I said, most of the markets are doing that right now. I'm going to give you guys my contact information here, and then we can go back to some of these if we've got time. But I do have some openings for private mentoring for those of you that are interested. I have been a full-time trader for about 25 years now. Let's do the math here. Starting in the mid-1990s. And I have been teaching almost that entire same time as well. Come from a background of teachers. So I love to do live coaching, but I also do private coaching. And what that involves is basically keeping a trading journal of all of your trades, marking where your entries and your exits are, and then working on learning about the things that are triggering higher risk problems versus the lower risk situations, and how can you tweak your trading strategy to give you better returns. And if you don't have a trading strategy to begin with, where can you get one? What are the things you can look for? And just basic, pure trade analysis, improving what you're already doing, developing a strategy, motivation, of course, keeping you on the straight and narrow, so to speak. and also sharing a lot of, the struggles that other traders have gone through. This is a good example of momentum shifting here too. So this is what we call that widening up zone there. So if you're interested in having a free phone consultation and you're serious about diving into your trading on more of a one-on-one coaching level, then send me an email at Toni@ToniHansen.com and we can chat about your trading, markets you trade, and what you need assistance on. A lot of my traders, I even work with hedge fund traders, and they've been trading for a decade. And a lot of times they'll just run securities off me. Like, what are you looking at here? I have been an analyst for TheStreet.com, Mad Money, Hard Right Edge. I've taught for the CME group for a couple decades here. And you'll also see me teaching at a lot of the expos throughout the country as well. So Toni@ToniHansen.com. Let me pull up. Do we have time for another? Maybe one more. Bastiat Group, that was the company that my website was originally founded upon. I had a partner back then. He was mostly interested in trading grains. He's no longer trading, but I am. And that was the name that he gave to the company. Friedrich Bastiat was a economist. So for those of you that don't know the name, let's pull up, go back to that trading view here. Pull up Palladium. I usually go over this on Fridays. Um, Platinum. I don't trade it myself. There we go, futures. So you are right at a zone of where this is coming into a widening up area too. So you've got those three lows here following the leg. So here's your kneecap zone. So this will start to go and do more of the back and forth type of moves. It's very similar to what we saw, not long ago, where this has a good chance of going into a slightly lower low there. But overall, I would expect more back and forth action and this to be a really good level of support down in here. You're still in that bigger trading channel though. So the lower risk buy setups are going to be happening once you're out of that trading channel. All right, gang. So that is it for me. Thank you for joining me here. And for those of you that have other questions on securities, feel free to join me on Friday. If you go to ToniHansen.com, you will see a sign up for Forward Focus. So that is how you get into that session every Friday. You're welcome. All right. Thanks again, David.